Kitco Mining special coverage of the Vancouver Resource Investment Conference is brought to you by Snowline Gold.
Is 2024 the year for gold equities? This is Paul Harris for Kitco Mining at the Vancouver Resource Investment Conference. Joining me this morning to discuss is John Feneck, founder of Feneck Consulting. John, welcome back to Kitco.
Thanks a lot, Paul. Nice to see you again.
Now, 2024 is just a few weeks old. It's been an interesting year so far. Gold is holding the line above $2,000 per ounce. What are you focusing on this year, or what do you think will be the focal points this year in the commodity space? Gold, silver, copper, uranium, lithium?
Okay, sure. So gold has been resilient now for quite some time. If we were to have this interview at VRIC last January, if you remember, we tested that 1790 to 1800 level and bounced, 3 different times off of that level. It then started to get back down there early October, and then we had the unfortunate events of October 7th, right? And gold bounced again from that 1825-ish level to stay above 2000 now. So in our view, when you have the March financial crisis, that put another floor on gold. When you have the unfortunate events of October 7th, that put another floor on gold. You saw that there's a new Taiwanese leader that just got named last week. There's constant news, in our view, about China, Taiwan, and what if this, what if that. There's always something going on geopolitically, it seems. And that's why gold is attracting more money, I think, globally. And so we think gold's in a great position. We think, unlike many people, that it's done quite well. We're not displeased with the $2,000 price. I don't care if it gets back down to 1900 or 1850 even, because we know that gold on the long-term chart still looks beautiful. And so when you look at silver as a precious metal, it is, as we mentioned in our last conversation in November, not the same. Silver has done extremely poorly over the last couple of years. It is one of our top 5 holdings in full disclosure, but all of that position was built, into and before April of 2020. So I continue to hold that, but I'm not adding to it.
Silver seems to be particularly interesting because on the production side, you're looking at production deficit. There's more demand than there is production, which is presumably a positive. But it can't get past that $23 per ounce. Going back earlier last year, you were looking at the $24 per ounce, but now it's 23. It's struggling to get to and get above.
Right. It seems like there's more and more resistance, like you said, being built at lower prices. So 23 to 24 is one level that needs to get broken through. But really for me, I've said for months, it's 26. 26 on a couple of closes would be really good to see breached, because that would bring in 27 to 28 very quickly. And then 30 is major resistance, right? So I want to see 26, that 25 and a half to 26 level breached. I think that will happen within 6 months. I really do. And that's why we've been accumulating a lot of silver juniors here. Silver juniors look extremely attractive. We've been focusing, Paul, on companies that have good management, but also a lot of ounces in the ground. If you look at what Abra Silver just did, for example, January 10th, they came out with their resource. Let's see, the M&I was around 250 million ounces of silver, right? I mean, that's just outstanding. When you look at Aftermath, they've got a tremendous amount of silver in the ground. When you look at producers, right, some beat up producers, Silver X producing in Peru, good management, did the necessary things last September to headcount, right, and get leaner and meaner during a period where silver hasn't performed as well. Guanajuato, same thing. I'm seeing them tomorrow here in Vancouver. I really like what James and his team are doing. So I don't just look for good managers like James. I'm also looking for good teams. And if you look at his team in the field, Ramon used to work for Keith at First Majestic. It's like these guys know what to do. They just need higher prices.
I visited James's project there, Guanajuato Silver's project, yes. For both gold and silver, one of the pivotal points this year, there's an expectation that the US Federal Reserve will start lowering interest rates.
Yeah.
How pivotal will that be for the precious metals?
Very important, because we've seen a trend now of hawkish behavior from the Fed that dates back almost 2 years, right? So November 1st to us was interesting in that the Fed started to show their hand a bit, that they started to talk more about a soft landing. And then December 13th, after that light CPI read we saw November 14th, December 13th marked what we thought was a real sea change in behavior from the Fed. If you look at the dot plot, 17 of 19 members were then starting to consider cuts this year, not one cut, but 3 to 5 cuts, which I'm not in the camp for 5 cuts. I think that's way out there. Because if you look at the CME Fed Watch tool right now, which is a pretty good thing for clients and listeners to use, it's free. You can see that on December 31st, we had a Fed probability of an 80% cut happening March 20th. That, as of this morning, is now 46%.
When we talk about cuts, we're talking about a 0.25% cut?
Yes.
So 5 cuts would be 1.25%.
Exactly.
Example.
Yeah. I think they're not going to go to the 50 basis point cut kind of thing right away. They'll start with quarter points, at least in the first half of the year, and see how things develop.
One of the commodities that had a great 2023 was uranium.
Yes.
Is that momentum going to carry through into this year?
I think so. Last year, we saw the spot price really explode, but here in January, we've seen it move even higher, right? On the back of a lot of good news coming out. Just, countries like the U.S., embracing uranium. So I think there's a catch-up trade there with equities being pretty depressed. Not like Cameco and the large cap names, they've done quite well. But the small stuff, I'm seeing a bunch of people at Uranium Night tomorrow here. In attendance there, you've got COSA, Forum, PurePoint. There's going to be a bunch of little names that we've been tracking now for 3 to 6 months. We've added some to those kind of names, but we want to add more because there's going to be a catch-up trade in uranium equities to the spot price.
Okay. Conversely, copper didn't really have a good year.
Terrible.
It was pretty flat as a pancake.
Yeah.
If anything, trending down, and that has continued into 2024, despite the fact that most of the major analysts are still forecasting copper deficit coming. It's just around the corner. What's happening with copper? Why isn't the price really getting some action?
So Goldman 6 months ago put out a piece saying that they thought copper would be at 15,000 a metric ton by December of 25. So when you look at the price now, that's about half. If you believe in Goldman Sachs being a pretty decent shop on Wall Street, there are others like them that are calling for similar types of moves in the price of copper, not copper stocks. 100% move in a commodity in 2 years from today would be amazing, right? But what does that mean for copper equities? And that's what gets us excited, is that so many copper stocks have been thrown out the window here. There's a shortage of copper globally, right? I don't disagree that China is slowing down, but does that mean copper just stops? The demand for copper stops? Of course not. I think we're going to have a decent year this year, but a really good 2025 in copper. So we're positioning for that.
I think one of the interesting things, just in terms of the markets for copper, EVs is one of the buzz markets, if you like, and EV continues to grow. The market penetration continues to grow. But in the weather we've had recently here in Canada and the US with the snowstorms, been a lot in the news about Tesla's not working or running out of their charge very, very quickly, and people having to queue for hours to charge up. Why? Because there's not enough charging infrastructure. And that charging infrastructure all will demand a lot of copper. So these demand factors for copper are very, very strong. They're not going away anywhere. So it does seem to be the case that sooner or later, the copper price is going to really reflect that. And as you say, the few copper stories that are out there, they're going to reflect that as well.
Yeah, I really believe copper is going to be a great place to be between the next 1 and 3 years. It's hard to really pinpoint, but I believe in the story wholeheartedly.
Okay, well, let's talk a little bit more about the junior sector. Pricing for commodities was, let's say, generally speaking, pretty good last year.
Yes.
Gold was very good, copper was stable, uranium very good. Let's forget about lithium for the time being. But the junior sector, the market seemed to ignore it completely. And if anything, it continued to distance itself from the junior sector. Why is that? What will it take for that to reverse?
That's a 30-minute answer, but I'll try to keep it brief. One part of that, Paul, is something that I'm very concerned about, the short selling and downticking in the junior sector. I said this when we talked in November. I've said it on a number of shows last year. Eric Sprott put something together, in November. He did a webinar around this topic. I'm an advisor to a conference April 29th that's going to talk about this for a 45-minute segment. I think it's really important that as a sector, we come together and ask questions of regulators, of bankers, as to what's actually happening. And I say this because being at my computer 12 hours a day with a limited social life, I will look at trades that I put out there, good till canceled, for 2 weeks, right? I have a 2-week order out there to buy a stock. Finally, it gets close to my buy, limit order, and I get passed over. Someone prints below me. Now, how did that happen? I call my broker dealer. They don't know. They say it's the market maker. I call the market maker. They say it's something else. No one takes accountability for what's happening in our sector, and it's very frustrating, not only to me, but to my followers and clients. It's like, hey, you told us to buy, this would be an attractive price, right? Like, we heard this analyst say it's an attractive price here, but we can't get filled on the orders. It's a problem. The other problem I think we addressed in November as well, which is the need for funding, right? Juniors constantly need money. That is not going to change this year. And I think that they need to be more creative about how they get that financing, meaning perhaps go to private equity, generalist type investors, right? It's harder to get those people on board, of course, but they're not jaded, right? Maybe they've never invested in our sector. Maybe their only experience is buying gold.
Well, I completely agree with you there. I think it's tough markets like these where the investor relations professionals really should be earning their money. And unfortunately, you don't see that very much. I think it's kind of interesting at the moment, as we mentioned earlier, gold is seeming to form a floor at $2,000 per ounce. That hasn't opened a new financing window for the precious metals equities. No. Why do you think that hasn't opened?
I think it's let's take a look at it since the pandemic, right? If you looked at any junior chart since the pandemic, we're going on 4 years now since that spike started. And most junior charts look something like this, right? So they're continuing to raise money at lower prices.
I think you got your angle wrong.
Well, I'll just say this, not all juniors are created equal. Investors, accredited investors, all need to do their due diligence, right? You need to call the company and understand, what are you going to be doing with my capital, right? I mean, that's what's important from this point forward. Is if you've made bad mistakes in the past, that's fine. It's just changing behavior moving forward as to, I don't want to invest in a lifestyle company. I want to invest in someone who has a plan and is going to execute that plan. And if gold prices just stay stable, they're going to do quite well.
I had a conversation earlier today at this event with a newsletter writer, and we were talking about the artworks that often adorn the walls of the offices of junior companies. I wonder if you've got any thoughts or observations on that.
I've not. I try to stay at the conference and have people come to me as opposed to visiting each individual office. But yeah, that's not good. I think this is a time to pull in the belts. I coach a lot of my CEOs on this to say, hey, if you attended 8 conferences last year, maybe attend 3 or 4 this year. Be more selective with where you're going. If you want to deploy all that money into the ground, that might be a good strategy, but we're not getting rewarded for that, right? Unless you're a Snowline or a Hercules or a Goliath or whatever, right? Like there are some companies that stand out, but try to come up with a balanced approach. You have to be nimble and thinking about the treasury that I have is so important right now, and I think that would resonate with clients, right? Because clients are frustrated. Let's be honest.
Well, one group that does seem to be moving and starting to invest more into the junior space are the majors. I think the end of last year and starting this year, we're seeing more strategic investments or private placements in the juniors. AngloGold Ashanti investing into, I think it was G2 Goldfields, I think was the latest one I've seen. It seems to be good business for them to do so, given that A, the juniors are trading at such low share prices, and B, the majors can get footholds or toeholds on some development assets they're going to need at some point in the future. To what extent or not do you think that's going to continue throughout this year?
That's always hard to say. I I think, unfortunately, okay, so let me take a step back. I started a series with Don Durrett. I don't know if you know Don, but Don and I do a monthly interview now with a CEO. We do a half-hour macro up front, and then we interview a CEO. And one of the things that we continually ask is something not about like, will you get bought out this year? Will you do a JV this year? What kind of ownership do you have in the capital structure that would avoid a takeover? Because we don't want our prices to be taken over at these prices, right? Like we really don't. We want to see a higher, we think gold is going to 22 to 2300 over the next year or two, and these gold juniors will kill. So we want to make sure that company will survive this period of time when you've got vultures circling, right? And we don't want a 20 or 30% deal. We want a higher payday. That's what people invest in our sector for.
Okay, so you want to avoid the take under and see the extent that the companies are interested and can survive until that moment in the future.
Yes.
Okay, let's wrap things up. What does your research tell you? What is a healthy investment strategy at the moment?
I think one includes cash. Cash is yielding 5+% at a lot of banks in the US. That's very attractive. 2 years ago, not the case. We're under 1%. I think, like I said, pick up the phone, do the due diligence with these small companies because not all of them are created equal. Some of them are shareholder friendly. Some of them won't even get back to people like me or Don Durrett. So you kind of have to look at it as a rifle approach as opposed to a shotgun approach, right? And I think being diversified, a lot of people that talk to me or follow me at these conferences will say, hey, I bought 5-year holdings. That's great, but that's extremely risky. We have 50 plus names in our portfolio, right? So if something bad happens, something unexpected, I'm not going to get hurt.
Okay, 50 is a lot of companies to follow or become educated about. Okay, John, what are some of the things you're looking forward to this year that you expect to happen, that you hope will happen?
Well, I hope silver will get out of the basement. I really hope. This is double fingers crossed. I think gold will surprise people and continue to remain resilient. I think copper will have a better year this year. I think uranium is going to attract a lot of money. If you look at the deals we just saw from Fission, from Uranium Royalty, I mean, these are nice numbers that these companies are raising at the exact right time in Q4. And that's real positive. So as a complex, I think commodities are going to get a lot more notoriety from the investing public in 2024.
Well, let's hope so. John, thank you very much for joining us today.
Of course. Thanks, Paul.
And this is Paul Harris for Kitco Mining at the Vancouver Resource Investment Conference. And if you like what you see, don't forget to subscribe.
Kitco Mining's special coverage of the Vancouver Resource Investment Conference is brought to you by Snowline Gold.